Warren Buffett has a net worth of over $100 billion as of November 2022. He amassed his fortune majorly through investing. He's known for his value investing strategy, which has been tested by other investors and proven to be effective in making the most out of every investment. He's regarded as an investment legend. Mohnish Pabrai followed his investment strategies and achieved great returns from their investments. In this video, I'll explain 6 of his best rules of investing that made him one of the wealthiest people in the world and have kept him on the Forbes list of wealthy people for years. Now, if this is what you'd like to know and implement, make sure to watch this video till the end so you don't miss out on any principle. Hello and welcome to Alpha Finance. This is the channel to watch if you want to learn more about personal finance, investing, and cryptocurrency. However, before I get into today's topic, do me a favor, subscribe and hit that like button because it really helps out with that YouTube algorithm. Thanks. Alright, now let's get into it. Number 1. Understand the business. According to Buffett, you should not invest in a company because everyone is doing it or because it looks good. You should understand basic things about the company before buying it. Take your time to understand everything about a company before investing in it. Understand the economics of the business you want to invest in. Know their products and their worth. Know the market advantage of the company and its uniqueness from the competition. When you understand all this, you'll be able to determine if the investment is something you want to be involved in. Everyone has an area or something they're most curious about. Buffett advises that you explore your curiosity to find the best business in that line to invest in. You need to stay within your area of competence to make the most out of your investment. Going out of this area to dabble into other areas that you know little or nothing about will not make you enough money from investing. To determine your area of competence, look at the things that interest you or the products you use every day. Then you can start exploring them to know the right business to invest in. The goal is never to lose money, and don't ever forget that goal. In all your investments, you need to hold that at the back of your mind, that you're making the investment to make money and not lose it. Number 2. Pay attention to the facts, not the emotions. Investors are always very excited during bull markets. They hurriedly make investments during this time because of the money they just made from previous investments. When things fall, they don't seem to be making money, or they're not making as much as they would have loved to make. They just want to leave the business. Know the facts and figures of the business that you're investing in. Be apt with your knowledge so you won't be controlled by your emotion to buy when you're not supposed to buy or sell when you're not supposed to sell. You need emotional stability to succeed as an investor. You shouldn't be controlled by fear or excitement to make any investment decision without proper knowledge and understanding of the facts. Number 3. Think about the future. Investment is not necessarily for the moment. You will not plant a seed in your garden and go out there every minute to see how it's doing. Investment is for the future. That's why you need to be ready to hold out your investment for the longest possible time. You should not sell your investment at every market crash. You need to know what the future holds for the company before you invest. Once you've done your calculations well, you should not be bothered by whatever happens at the moment. Make selling the last option you will ever have to make when everything goes down. When the economic characteristics of the business change in a big way, you can consider selling. But if none of this is the case, then selling shouldn't be an option. You shouldn't sell because it looks too high or the price has appreciated greatly, and you think that you'd be making a lot of returns on your money. You can always make more money if you hold out and think about the future. A person who invested $1,000 in Buffett's company when it started would now have over $30 million. That's the power of time and long-term investment. For your every investment, be ready to invest for a long time. Number 4. Ensure the business has a moat. Warren Buffett invests in companies, not just stocks. He takes his time to understand what the company does, its uniqueness, its products or services, to determine if he should invest. A business that does not have a competitive advantage is not the best business to invest in. You think in terms of 10 or 20 years from the time you want to invest to see if the company has what it takes to stay ahead of competitors. If the company does not have anything that distinguishes it from its competitors, it does not have a future. You should also be able to evaluate the company to see how long it can last. You can easily do this by looking at the product the company deals with at the moment. Then you will ask yourself, will this product still be relevant in the next 10 or 20 years? Will there be a better alternative that can push this product out of the market? Of course, you may not have all the answers, but your answers to these questions give you the insight to know if the business is worth your money. Another thing you need to critically examine is the management of the company. The success of a company is dependent on how it's managed. Endeavor to go through the history of the company. You can have access to this through the annual report. Check from 10 years back. Look at the things the management promised and check if they were able to fulfill their promise. This will make you know if you can trust their projection of the future. Every management projects a better future for its company. If they were not able to achieve that in the past, there's no guarantee that they'll be able to do so in the future. It'll be safer for you to look for a company with a great track record to invest in. Number 5. Buy the business when it's absolutely cheap. You will not make a lot of money from your investment when you keep buying cigar butts. Buying cigar butts is safer to do and less strenuous, but it doesn't give you the best returns for your money. You need to learn how to buy wonderful businesses at a fair price. Warren Buffett says it's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. You need to see that the business has a lot of potential before you buy it. This doesn't mean that you buy it at an exorbitant price. You should be able to know how to buy a wonderful company for a cheap price. Since you're dealing with a business in your area of competence, you already know the pros and cons of the business. Then you'll be able to study the business to see where it stands. This will make you place a worth on it. Now, don't check the price first before doing this exercise. Checking the price first will not make you truthful with your evaluation. Once you've come up with a price for it, check the selling price. If your price is in the range of the selling price, either a little above or below it, don't buy it. You only buy it when your evaluated price is way higher than the selling price. Let's say your estimated worth is $10,000, and then the selling price is $90,000. Buying that will not give you a good bargain for your money. But if your estimated worth is $10,000 and the selling price is $4,500, you need to buy it immediately. Opportunities to see a business selling for less than it's worth don't come knocking on your door all the time. You need to know how to grab one when you see them. Warren Buffett regrets not having invested in Google because he did not understand the business. Some opportunities will come your way as an investor. Learn to seize them. Play big and never waste any opportunity, because you'll only have regrets when you look back at them. You do not get 500 opportunities in life, but learn to grab the few opportunities you do have. Great investors do not make many investments. They only make a few great investments. The important thing is that they grab opportunities to make those great investments. Number 6. Invest in yourself. Warren Buffett has always stated that the best investment you can make is in yourself. If you're worth $50 today, your value increases with every new thing you learn, every new skill you acquire, and every change you make in your life. In an interview, Buffett said, "By far the best investment you can make is in yourself." This is so true. You are your greatest asset, and you cannot grow beyond what you know. You need to continue to build yourself into every facet of your life. As it regards investing, you need to continue to open yourself to learning more ways to invest. You should never get to a point where you think you are all-knowing and that there's nothing you can learn from others. Your investment will grow in proportion to how much you know about it. You need to continue to learn about the market and the lives of the people you admire. Warren Buffett made an analogy in an interview with Forbes. He recommended that you should make a list of all the people you admire, then write out the things you admire about them. Once you've done that, start working on how to inculcate those traits into your life. He went further to say you should make habits out of those traits. Nobody can take any investment you make into yourself away from you. Warren Buffett not only states these principles, but they are also what he practiced to build a fortune for himself. These are great investment rules that'll make you a billionaire like him if you follow through with them. So, did you learn something new in this video? Will you be trying out any of the principles in your next investment? Share your thoughts in the comment section below. And don't forget to subscribe to this channel, like this video, and hit that bell icon to be notified of when the next video drops. And with that, thanks for watching, and we'll see you next time.